What's up, guys? What's going on? What's going on? Let me get situated. Turn the sound down. Let's get rid of the background music, actually. Rave and techno. Doesn't get me in trouble. So I'm always looking for music that's not copyright. And I haven't had any infractions by throwing that channel on. What's going on? Good afternoon. Give me a quick sound check before we get going. And then we'll get going. What an exciting day. Depending on what side of the market you were on. It's entertaining to watch, though. What's going on? What's up, Zoomer? Kali, Brainiac, Fern, Meaver. Where's my... I actually want to get another window up for the stream. Just give me 1 second. Sound is good? Good. I don't remember the last time I streamed. Was it last week? I don't know. Every day just... I think it's like after you hit 30, every day just kind of melts into the next. All right, let's get started. If you're not a subscriber, please subscribe, hit the like button. As you can see on the bottom of the screen, it says powered by Cryptowatch. So for those of you that have been following me now for as long as you've been following me, you guys know that I'm pretty cheesy too, with who I work with, who I partner with. I think that I have reasonably high standards. So we're going to go over Cryptowatch during this stream. I've shared Cryptowatch in the past. For some people, Cryptowatch is new to them, but the funny thing about that is that Cryptowatch is a tool that a lot of crypto OGs have actually been using now for some time, right? You don't even need to say some time if you're a crypto OG. And I don't mean like crypto OG in the sense that they're around for just more than the last cycle. I'm talking about like 2016, 2015, multiple cycles at this point. You've seen a lot of this platform shared by those types. Whereas like a lot of newer traders now, and I'll go into why I do this as well, just use TradingView as their charting platform. TradingView doesn't really offer anything special, though, honestly. So we're going to go over Cryptowatch for those of you that are unfamiliar with it. So shout out to Cryptowatch. Cryptowatch is part of Kraken. If you're not familiar with Kraken, if you're not familiar with Jesse, I think you have some homework to do. So after the stream, you have to do some homework. But it's a phenomenal platform. So I'm partnered with them now. I'm working with them now. So the stream is sponsored by them now. So the links for the platform are below. There's some other links in the description below as well. You guys obviously know that I trade on Bybit. That's one of the reasons why I'm really excited about Cryptowatch now. But again, we'll get into that in a little bit. We have a lot to unpack in this stream. So I'm going to take some chart requests a little bit further into the stream. We're going to, keep it relatively casual. As my streams aim to be most of the time. Again, very extemporaneous, off the cuff, no script. I sometimes lose my train of thought. I sometimes speak in ellipses. But I think we're going to cover some good details in the stream with respect to the platform. So with respect to Cryptowatch, desktop, my thoughts on what has taken place in the market, talking about Binance, how I am trading this, what I'm looking for, how it could possibly unfold depending on, what details actually unfold. So I think there is a big difference between some kind of criminal charges versus, something more punitive in a monetary sense, such as a fine. Let's get it started. Let me see if there's any familiar people in the chat. All right. So what I do want to go over first is the platform, Cryptowatch. So there is a website. So Cryptowatch website has been around for a really long time now. Let me give you a little bit of some background. So the crypto market is kind of a pain in the ass, right? There's a lot of stuff is fragmented. So, if I'm trading, I came from trading index futures. So I was a crude oil trader. Before that, I was trading the ES, and I've actually gone back to trading index futures again. So when it seemed like the market was going to completely fall apart back in November and December of last year, I figured, let me dip my toes back into to legacy markets again. And if you're trading index futures, you have your pick of what kind of software you want to use, right? That's up to you. Whether you're not, you're like myself, you use Sierra charts. I used to use Trading Technologies in the past. But you're still trading through the same exchange. You're still trading through the CME. So it's not fragmented in the sense that there are any issues that you run into where you're using like a charting platform and you can't get a pair on it, or you're using an order flow platform and it doesn't offer trading, it only offers charting, and you're using a different platform for the trading, and you're trying to sort of synthesize all these different tools to get your to get a good view of the market depending on how you trade and where you trade. So it's really fragmented. It gets really messy because of that. So I was using at some point during trading trading crypto, I was using 10 different applications. I have like Coinalyze open on one screen. I have exocharts open on another screen. I have, I had the exchanges open on different tabs. And, it gets very messy. And then I would find a platform such as, there's a couple different platforms like Quant Tower, which turned out to be garbage, where you can trade and chart. But, the drawback was occasionally there's a mistake and you lose $13,000 because their platform just sends in market orders for 1 million a clip. That was me. But either way, so Cryptowatch is a charting platform originally, but now it actually offers trading. So it's an awesome all-in-one package. I don't use the website. So for example, this is the website application. So this is the web destination. I'm not a technocrat by any means, so you'll hear me use the wrong jargon and terms quite often. But the desktop application, I think, is where it's at. And because it doesn't really use any, again, I'm gonna say something stupid. It really doesn't really seem to use any compute. So if you're using a lot of other trading software, you have to think about how much of your computer it's actually using up, how much bandwidth, how much energy. There's only so much to go around, right? You don't have to study physics to understand the conservation of energy when it comes to using your computer and only having a certain amount of resources to divvy out. This desktop platform is, it's almost like it doesn't use any compute. So I have a pretty badass computer. And even before that, when I originally had Cryptowatch desktop application, it just runs so smoothly. It doesn't run into any issues. There's no lag. There's no updating lag. When you minimize it and pull it up and you have multiple windows open, it's just, it's butter. So I'm going to be talking about this a lot more in the coming weeks, in the coming months, obviously. And the thing that really got me excited about it, and I know it sounds really shilly, is that now you can trade on it, because the issue is like and it's always something you fall, sorry, I need more coffee. It's only an issue that is unique to crypto, but because exchanges are really fragmented, there are some more edges to explore in crypto. But like when I was trading, when I initially was trading index futures, it was like, okay, what software can I afford, right? Different traders are, you might have one platform like Trading Technologies, which is $1,000 a month. You have another platform like Sierra, which is $150, but they pretty much have the same things. And that you could connect to your, you could trade through the CME, right? You have an introducing broker, you have an FCM, and that's it. Like this, you don't have to wonder whether or not you're going to fall in love with like, Sierra charts and then realize that you can't trade on Bybit, right? And then you're using Sierra charts to, get your footprint, and then you're using TradingView to get your chart, because, you know, maybe it offers one indicator that the other doesn't, and it's messy. So now Cryptowatch it's all in one, right? So it offers access to, I think it might be 10 different exchanges right now. I personally am very interested because they are, I think by the end of this month, there will be trading through Bybit. Now, if you're trading Coinbase, if you're trading Kraken, that's phenomenal because they're already connected. And what I should say is that I'm actually even more excited, not just because you could trade on the platform and do it all in one place, but because they also offer ladders. So ladders are something that I've been familiar with for a long time, coming from trading legacy markets and trading initially on trading technologies using their ladder, which kind of everybody tries to emulate. So it's not that ladders are really, and you know, I know I'm long-winded right now. I'm going to show everything and tell you what makes this unique and what are the, I think, finer features of this. It's not that ladders are really that necessary trading crypto. You know, it's not as tight, so the ladder is going to be pretty noisy. You're going to have to, if you're trading, like if you're scalping BTC, you know, if you're scalping the ES, for example, and you're using a ladder. So let's just go to a ladder real quick. So here are multiple ladders. If you're scalping ES, you know, you're leaving it as the normal tick setting, right? Normal point, 25 cents for the E-mini S&P contracts. That's fine because the ladder is, it's not going to jump all over the place. Obviously it can, depending on what kind of volatility we have. But you could trade off of it very comfortably, very quickly. And it's an awesome feature for someone who's a point and click trader, for someone who's a manual, a manual discretionary trader. If you're trading BTC on a ladder, you really have to increase the aggregation, the tick setting. So, you know, maybe your tick setting is, for example, such as this ladder over here, maybe it's $5. You get a good idea of how the market is moving, though. You get a good idea of the sort of supply and demand imbalances that come into the market when you're looking at a ladder, the same way when you're looking at a footprint. It's just another tool that gives you insight into the actual order flow that's taking place. And also, it's very easy to trade off of this. You could use hotkeys trading off of a ladder. I think that this ladder might offer hotkeys. I haven't fully explored all the hotkeys. I'm sure it does. But it just allows for very quick execution. That is a benefit that I think that most people can, a feature rather, that most people can benefit from. In other markets, you might you might have a ladder like this, or you might have 4 ladders like this. And I might have I would personally have the NQ right next to the S&P. So I might have the NQ next to the ES, and I'm seeing sort of who is taking the lead, whether or not, for example, there's many times where the NQ will continue to run and the ES is, not really showing any of that similar oomph. And you see those markets get detached. It's a little bit easier to spot markets get detached when you have all the ladders next to each other. And if you're looking at markets that are correlated and you have sort of a baseline or an understanding of the norms for those markets and how they should behave, how tightly they should trade, you could very easily see all of that when you're looking at multiple ladders next to each other. And you could also, if you're trading, let's say you're trading BTC on multiple venues, you could take advantage of arbitrage opportunities. Bitcoin is trading on one exchange, it's trading, $20 higher than the other. You could sell on one exchange, buy on the other. You could take advantage of those arbitrage opportunities across different venues. That's a little bit more difficult now, obviously, as the market has as a lot of that edge is eroded. But earlier, a couple years ago, going back even more than that, honestly, there were a lot of opportunities like this that you could take advantage of as a point-and-click trader. Either way, I love this feature. Not everyone might find ladders necessary, but again, if you're a point-and-click trader, I think that it's far superior to being on an exchange's website, clicking on the buy, the sell button, and having to go through that UI versus getting really familiar with a tool like this. It's kind of like you're just becoming familiar with your instrument panel, your cockpit, and I just think that it's definitely a benefit for someone who's going to, again, point and click trader. There are features such as scaling that are integrated into this as well. So scaling is obviously something you could take advantage of. You could do it on your own, right? You could manually place orders, or you could just use their scaling feature and set up a scaled set of orders, right? Limit orders, and change your increment, the scaling, the weighting, and all of that. And you don't have to do that manually. You don't have to take out a calculator to do that. You don't have to do any of that because it's already built into the platform. All right, so let's take a look at some of the templates I have. As an aside, all these templates are going to be available. So I'm going to be sharing all my templates in the following streams. This whole spiel in the beginning, I'm not going to be as long-winded, but I just want to make sure that I cover everything. But all my templates will be available in my Discord. So I have a Discord. I'm not like in the Discord active babysitting it, just to be completely honest. What I tried to make was like an archive of all the things that I think will be useful for all types of traders, honestly, from all skill levels. So I'll make sure that all of my templates are always up to date in that. The Discord community is called The Stable, and the templates should be in the resources section, or there's actually a Cryptowatch channel now where you could find all the templates. So I have a few things set up here. Bitcoin is recovering the drop. So I'm going to go over the level that I'm really looking at in a second, but I'm going to touch on this stuff first. I have a few templates set up. So I have a bird's eye. So I have multiple markets right here. I have this trader set up. Let me turn the volume off. So with this trader setup, you have your depth of market. Don't have a ladder on this. So this is just kind of a basic order template, but it's not as basic as you're going to find on an exchange. The benefit of this is you could actually just join the bid. So we're retaking the level that I've marked off as the CFTC Binance level. You could just join the bid, or you could just join the ask, rather than like trying to chase, right? And trying to constantly update by clicking on either the depth chart on the exchange or manually inputting it. This allows you to join the bid or join the ask very quickly. So this is a great template. I have depths across multiple markets, prices BTC, multiple order books for the same exchange but changed. Each one of them is different based on aggregation. So this is a $500 aggregation. This is a $200 aggregation, a 100. Not something that I really lean on. That's an older one. I have tapes for BTC and ETH. A lot of you guys use Agger. So that's probably the most popular platform to use a tape, or to find a tape. Tape meaning times and sales, right? So the trades that come through, and you could filter them, right? So you only see a certain amount. You could turn on the sound for that. Agger was great until see what size I want to highlight, and now with sound as well. Sound is an interesting feature, because if you're not looking at the tape, the sound actually obviously gives you some input into the overall velocity of the market. So you don't have to look at a tape constantly, right? It's not a market where, there's some people that kind of LARP around, like all they do is look at the tape. You're never going to pick up on changes in the tape the same way that, some kind of high frequency trading system will. Okay. But there is something to be said for paying attention to market's level of interest based on where you're trading, and, how eager people are to get involved. And, you see that level of interest or participation by seeing how fast the tape moves, how it picks up, how it slows down. But I mean, the benefit of the sound is that it's an auditory component, and you don't have to look at it to understand when things are taking place, right? So I can set this so that so let me blow this up. Settings. And I could set the sound based on buys, the highlighted buys, the sells, or the highlighted sells. So that's really important, right? So for example, do I want to hear everything? Okay, maybe I want to hear everything because I want to not always have to keep an eye on the screen, but I do want to know, again, the level of activity in the market. Let's say I'm just kind of, dicking around, and maybe focus on one screen instead of a tape which is on the other, or maybe I'm even in another room, depending on the how interested I am in trading that afternoon. If I always want to be kind of tuned in, then I could turn my speakers up, and I could go to the bathroom, I could go to the kitchen, and and I could hear if there's some kind of change. Or, and I think that this is even better, you can actually just have a sound, and this is where it's superior to the other tapes. I could just have a sound for large lots, right? The quant prep, the link is below. So, all right, I'm not really interested in the odd lots. So what are odd lots? Odd lots are, a standard lot size, if you're trading equities, for example, is 100, right? 100 shares. An odd lot is a person who comes in and buys like 1 share of something, 5 shares of something. Okay. They don't have a lot of money, obviously, right? And because of that, they're called odd lots, and they're not going to be what's considered maybe the people that are going to be moving the market. Obviously, when they're herding together and the animal spirits are, combined during times of mania, during bubbles, then yeah, in aggregate, they're going to have a massive effect on the market. But do I really need to know when like Joe Blow buys $500 worth of Bitcoin? Do I need to hear that? I don't know. Maybe it could be a TWAP. It could be a couple things. It could be an order broken up. It could be a swarm. But my point is, maybe I just want to know when size is hitting the market, and it doesn't even have to be, it doesn't have to be tremendous size. It could be, hey, maybe I want to just hear things that are above, $100,000 positions, right? 100,000 contracts. You could set it to base, meaning you could set it to the BTC amount, or you could set it to quote, so notional. So, base, for example, would be 1 BTC, and if you were looking at it listed in quote, it would say 27,223, right? So let's say I just want to hear the tape based on that. I could do that. So that's cool, right? I find one of the most useful things to key into is when spreads blow out. So when spreads blow out, meaning when there's a ton of toxic flow, this occurs at like, blow off tops and blowouts at lows, periods where there's also a ton of liquidations, market makers step out of the way and the spreads blow out. So spread meaning the distance, right? So the spread is actually just between the bid and the ask. But the distance between the bid and the ask increasing, blowing out. Now it's going to vary depending on levels of volatility, but a spread blowout is when it increases significantly. So maybe it's like 50 basis points. Okay, maybe it's maybe it's 100 basis points. Maybe it's 1%, 2%, 3%. It could be many different things depending on what you're trading, right? If it's an alt, I mean, that could be the Grand Canyon. If it's BTC on the most liquid exchange, maybe it's only a point. Maybe it's only, maybe it's only 1%. Maybe it's only 50 basis points. Maybe it's, it's going to be obviously be much lower than an alt. But maybe I don't want to keep an eye on the tape. Maybe I'm just listening for that. Hey, I want to know when spreads blow out. Okay, so all I'm going to do is I'm going to, it's not on this screen. I have another template, and this is labeled just as flow. This is the, right here, we're looking at a spread chart. So this is going to show you just a rolling chart of the bid and the ask. So best bid, best ask. So top of book, right? So we're looking at the best bid, the best ask, and you can see where it's separating, right? Market moves up, bid might not follow. You might see a lot of activity at the ask, a lot of activity at the bid, ask not following. What you're looking at is basically that bid and the ask separating. It's going to jump around a lot, right? That's pretty noisy. I could tighten this up if I don't want to see sort of, it happening as fast and sort of look at a wider pane of it. But either way, I mean, you're not going to have much history to look back on this, but you maybe do want to know the times when it really just, it separates quite a lot. So at the bottom of this, it shows you, okay, so the distance between the bid and the ask. So the ask is the red, the bid is the blue. And as you can see right here, what just happened was the distance between the bid and the asks increased a lot, right? So this is probably in that little move down. The ask didn't chase it. It's kind of a good sign sometimes for bottoms where the ask doesn't continue to move down with price. It's not like stifling price. And the same thing could be said for possible tops being found. The bid is no longer following price. The bid is no longer following price up. You're not really going to focus on that too much. You could look at, a footprint and see whether or not it's being absorbed. You could look at the book. You could look at either the depth chart and see if price is continuing or if price is, let's say, for example, moving up and the bid is following it. What you can do with this, though, is you could just key yourself into the moments where it separates a lot. So rather than doing that again visually, right? So I think this is set by Currently, this is set, the lower portion of that is set by percent. You could set it to, amount, the actual amount of the spread, so notional. But instead of just looking at this, right, you're not going to have time to look at everything. Maybe I just want to hear it. So again, another thing that I could do is I could just, and this is for the purpose of this conversation, tops and bottoms. And I'm just giving you examples, right? I'm going to make a pre-recorded video for Cryptowatch where I just go over all these things, obviously, in a little bit more detail, a little bit more orderly. But I just want to hear when the spread widens. Maybe I just want to hear when it widens by, 25 basis points. And that's, again, that's 0.25%. So basis point, 1/100th of a percent. And I could set it to 25. Now I could only hear whenever that occurs. And you'll see what happens if I put it on 1 right now, which is, it's as tight as you're going to get. And I put this sound on. When price begins to move, you should start hearing that sound. And you could set the sounds. There's a bunch of different custom sounds. So we haven't had that happen yet. But again, just a very valuable tool, or really valuable tool. Some of the other things that I have set up. So this is what I'm excited to use. This is whenever the Bybit. I don't know why I drew that out. It's because Binance is on the tongue a lot today. When the Bybit integration is all set, this is where I'm going to spend most of my time. And this is, again, I've streamed trading the ES and the NQ live the last couple of weeks, and I've actually had great trading sessions. I'm going to be doing the same thing for BTC and alts. And this will be the setup that I actually use. And as you can see, I've not only included the ladder, but I've also included this template as well. Again, it's not always the case that maybe you're going to want to use the ladder. Let's say that, for example, price is getting away from me and I'm looking to buy. I can continue to either click join bid, or I could just chase it up on the ladder. There we go. There's that sound. I could just chase it up on the ladder and add orders directly from here, right? Just by clicking on that, moving them up and down. Again, I think it's just a speed and convenience thing. Other things on this, and again, I'm going to let's turn that sound off. I'm going to make a pretty detailed video on this. I just wanted to go over this in the first stream, some of the things I have set up. All right, so because it is the news of the day, and I have this labeled, my thoughts on what's taken place. And I should say right from the get-go that I'm not a lawyer. I have never worked for a regulatory body. I am not a person who is an authority on this subject. I'm just a person presenting an opinion. So when it comes to Binance, and if no one is familiar with what I'm talking about right now, that's a shame. You're not paying attention enough. But you should be following, honestly, you should be following Tier 10K for news. The first news to hit, and that is on this chart right now, is Binance and CZ sued by the CFTC, right? Commodities and Futures Trading Commission, over regulatory violations. And we can see immediately the market responded to this. It should kind of come as no surprise that we're in an extremely punitive environment right now when it comes to crypto versus regulators, and when it comes to what it feels like for the most part is crypto versus the United States, or rather the United States versus crypto. Binance is the biggest kid on the block. Binance is like, Binance is like a massive zebra right now with no stripes. So it was inevitable that it was going to get picked off at some point for something. And I don't mean picked off like you're going to arrive to the website yet and see one of those notices where it's been shut down. But again, it just stands out. And if you don't understand the zebra reference, obviously big meaning it's more obvious, and no stripes because the point of the stripes with the zebras is so they could blend into each other. So they just look like one big floating blob of zebra. If you don't have stripes, it's really easy to spot you. So I want to say this is inevitable, right? There's a big difference, though, in how this evolves. So, for example, if CZ just gets fined, so if Binance just gets fined, I think that that's bullish. So let's talk about what is bullish about this, potentially. What's bullish? Okay, so out of this, it looks like, and this has been the CFTC's stance for a while now. CFTC and SEC fight, right? Over who gets control of the market. So the CFTC, they explicitly label BTC and ETH and Litecoin, I think, as commodities. So that's great, right? That's great because that means, obviously, it's obvious with BTC that's a commodity. But with ETH, there was a little bit of a gray area recently because you have Gensler again, who is on the offensive. That's bullish. What other reason that's bullish? Well, if you're trading commodity futures, there's the tax benefit in the United States. So a lot of people don't know about this, but if it's a commodity future that you're trading, you pay less taxes. So the way it works is, in the United States, your long-term capital gains, your short-term capital gains are different, right? Your short-term capital gains, you're going to be taxed at your income level. Your long-term capital gains might be anywhere from 15 to 22%. Okay. The commodity futures taxes are 60-40. So what that means is 60% of the money that you make is taxed at your short-term rate. So let's say you're killing it, right? Let's say your short-term rate is the highest it can be, which is, I should know, I pay it, 37%, 35%. End up almost giving half of my money away every year. So you get taxed out of your profits, right? 60% of them get taxed at the short-term rate, so whatever you fall under. And then the remaining 40% get taxed at the long-term capital gains rate. So, that is something that if you're trading commodity futures, that you benefit from, right? And you're also not going to get hit with any kind of wash sale issues. Whereas if you're trading equities, if you're trading securities, you get there's obviously the wash sale. Excuse me, my words tongue-tied. The wash sale rule. So, and this is what makes understanding correlations in equities really important, because if you don't want to violate that, but you want to get back into a position, well, a lot of times it's important to understand, what your initial position is really correlated to, so you could basically reflect that position and get back into something that resumes that relationship and takes advantage of that without triggering the wash sale rule by getting back into the same exact equity or asset, for example. Anyway, so that's bullish, right? They basically label them commodities, but they've been saying this for a while. It would be really weird at this point if something was listed, traded on the CME, and suddenly was determined to be a security. So ETH, for example, traded on the CME. Now, that'd be weird because obviously you would expect that they would have done their due diligence, right? And they would have had the finest legal opinion on that before listing it on the CME, obviously. But Gensler is a bit of a gremlin, so you know how that goes. A fine would be really bullish. I think a fine would be the best thing, right? CZ gets fined, phenomenal. We trade back above this level. It's water under the bridge, and that's it. It's kind of like the biggest boogeyman is out, and we've mollywopped him. So the more of these things get eaten by the market, and what should I say? The more that this bad news is disseminated by the market and we're able to trade higher, the better, right? That's one of the best signs of a bull market or a turning point, is when you're no longer responding to negative news. And I'm not talking about just knee-jerk algo behavior like we have, but sort of like 72 hours out after the market has kind of chewed on that and reflected it a little bit more honestly. If we have negative news and the market is still trading higher, it's kind of like it's just taking it on the chin. It's the same way when we talk about, absorption in order flow, or we're talking about order flow and we're talking about absorption. Hey, there's a lot of selling coming in and the market is now trading higher than where that selling came in. Okay, well, clearly it didn't result in anything and was the wrong positioning. So if that happens, I think that's the best case. Obviously there's nothing that's really clear yet. If it's criminal charges, which it looks like it kind of could lean towards, because of the mention of the internal trading desk, 300 different accounts, 2 personal accounts. There was like something about money laundering and comments about AK-47s and just bad shit. So if that's the case, if it's criminal, then I expect the market to sell off even more. That would be the worst case scenario. Either way, right? Whatever the decision is, if the market trades higher after that and is able to hold that level, it's like an all-in signal for me. Again, the market is going to tell you what it thinks. Okay, the market is not always right. Right? Anyone who says like there's a lot of like aphorisms and garbage cliches that are spun about in trading books. You know, one of them is the market is always right. The market is not always right. The market is really wrong often. But if the market has decided that it's not going to sell off further on the worst information coming, right? On, let's say, I mean, it's hard to say because if there's criminal charges, imagine that they try to take down Binance. I don't know. If Binance is taken down and we're higher, well, it's really clear at that point. But hopefully we don't have to get to that because I think the path there involves, I think it involves a descent first, obviously, in the midst of all that process. So, you know, this news is new. I've labeled the level on the chart, and there's a, you know, I got a question earlier today about levels. How do I trade this? So I've mentioned this numerous times before in previous streams. You could get levels multiple ways beyond just market structure, right? So the most common way to derive a level is to, oh, one thing I forgot to, I hope this color doesn't bother anybody. And if it does, it's okay, because we have like a ton of other setups that we can use. All these are customizable too. Again, I'm going to make a full video on this. It's pre-recorded. I'll trade on it, show you guys all the other features that I can't show you right now because I can't trade on it. But there's multiple levels there's multiple ways you could derive important levels, right, in a market. And it's not just, the most common one is what do I see, right? Where is the market? Where has it turned? Where are the major turning points? So I'll blow this up. Now, it's obvious where the major turning points are in this market. You know, major turning point is an all-time high. Major turning point is a multi-month range high and range low. Major turning point is an area where the market, you know, blasted off from or got smacked down from. These are levels that we keep in mind because moving forward, you know, we're wondering if we're going to get the same level of interaction or participation when we trade back to those levels. And if you're looking at a level that kicked your ass in the past, you know, if you arrive to it again in the future and we're trading above it, well, clearly, if there's still positioning that's based around that level, which probably isn't because it usually gets stale after a while, clearly that seller, those sellers, they're wrong and they're no longer there and they're no longer able to hold the market down. So when we retake key levels in market structure, obviously there's a ton of significance to it. The higher time frame, the better. Now, higher time frame, you have to have higher time frame evidence to, you know, sort of correspond with that. You can't just look at the market poking up above a multi-month range for 5 minutes and assume that that means it's it, right? So you want to see this sort of adequate amount of presence above a key level based on what time frame you're looking at the level on. You know, if it's a yearly level, well, it's not going to be a 5-second chart you're going to qualify it on. Then there's other levels, right? There's dynamic levels. There's moving averages. There's just time-based moving averages, right? So there's, or I should say there's just price-based moving averages. So candlestick, 4 points of data, right? You're looking at a moving average. It's an average of those. Okay. Dynamic level, meaning, you know, if we're retracing back to it or overtaking it or retesting it, you know, you could treat these sort of as dynamic support or resistance. And they're dynamic because they change over time, right? They change over time. Whereas a horizontal support and resistance level, a horizontal pivot, well, it is horizontal, right? It can't change. It's static. The only way you could change is by actually going through that price. I think the most important levels in markets, or what they should be in terms of on the hierarchy up there, are catalysts, right? Are event-driven levels. So for those of you that follow me when I was trading the ES and trading the NQ, you remember I labeled a level on Sierra called the Powell Hadouken. So Hadouken for anyone who plays Street Fighter. But I labeled this level because that was where he, you know, knocked the market off of its pedestal. This was almost a month ago now. The market was really confident. Powell spoke, and the market took a huge dump. Not massive, but it was enough to send it packing. So I labeled this, right? Because if we're able to trade back above that, well, what does it tell you now about how the market feels, or how the market was able to recover since then? So I will label any kind of major catalyst that caused price to do, to put in a significant move. Today wasn't a really significant move, right? I mean, this level is 27,164. If we look at sort of where that occurred, we're already trading back to it, but we saw significant sell-offs across the board in some of the higher beta. I labeled this level because if we're able to retake this in the short term, if we're trading back within the range, this range has been tough to begin with. If we're trading back in it, if we failed to break down from it, right? So if we failed on its own, if we failed on our own, right? Just sellers pressing the low, that's one thing. If we failed now with major FUD and we're trading back in it, okay, well, clearly the path of least resistance is not down. And you could also see, like, this morning was a little weird. So leading up to that actual breaking news, so control, you could easily change the setting on this. Leading up to the actual breaking news, right around here, there was a break in the correlation between equities and BTC. So normally BTC has a certain beta to the S&P. It's rare that you're going to see that the S&P is holding up in the morning session and BTC is not, and it's actually doing the opposite. It's putting in weakness. So it was weird, but it was obviously someone front running this news. So now if we're trading back above that, right after that breaking news, if we're trading back in the range, and this gray box right here, so it's kind of a blue gray, this is the value area of this entire structure. So looking at the daily chart, it's just that's the 3-day. That gray box is basically where we spent 70% of the time and where 70% of the volume was done for this entire range. So it's what, a 9 or 10-day range at this point. So there, the levels where you don't really want to get involved smack dab in the center because it's the most agreed upon price, but the extremes are definitely good areas to define risk. So now if we're back, if we've probed outside of there and we did it on really bad news and then we're back in it, I mean, I got to look up again, right? I have to, at least in the short term, looking back towards 27.8, looking back towards, 28 and above. But obviously we've come back to that level now. Right. And we bounced off that exact level where the news was dropped. Now, there's a few reasons why this would happen, why, you expect a level where news dropped and where liquidations occurred and where stops were ran to be the level now to be sold again. If you're trading back to it, you think, okay, maybe, it's a good reason to be confident. But a lot of the times the positioning that was there prior, someone who was buying this dip, when they were stopped out, you might have had people that were stopped out, and then you also have to assume there's a lot of people that actually just didn't have stops. And for trading back to where that occurred, they're thinking that, okay, I'm going to get out with my head still, and I'm going to sell at break even. So a lot of times what happens when you trade back to a level like this, you're going to have that first bounce, right? That first rejection. So if we're back above 20, we'll say 27,350, and we're back above firmly, right? And we see that the bid is following price up, and it's not sort of what we've seen all morning, which is as prices move down, it's kind of just looked like this. You've had a pretty thin bid, especially on Coinbase. It looks a little bit better now, but as price was moving down, it just looked like the offer was overwhelming anything. So there was a lot less liquidity to the downside than there was to the upside. It was kind of like those offers and asks were chasing price down to get filled. So the opposite of that would be us reclaiming this level, us seeing a ton of activity picking up. So you have the tape right here. And then seeing that the buyers are willing to chase this passively. So as we break back above this level, you see their bid remains firm. You see maybe there's a little bit less interest in the offer to sell. And then if you're using other tools as well, order flow tools such as your footprint, when there is actual selling coming in, you want to see that it's being absorbed at that level. Now, a footprint is basically what? It's just a history of what actually just takes place between these two things. So if we look at the bid and the offer, so this is an order book, and this is cumulative and then individual. A footprint is something that's obviously a little bit easier to use to look at, but you could see when a level is being sold into and hold, and holds, or the opposite when it's being bought into and is absorbing that buying. So if we see, for example, we break above, 27,350, the bid remains firm, and then we see that a bunch of selling comes in, and let's say that level is 2351, and we see a bunch of prints at 2351, 2352, 2355, and it's all selling coming in and the market's not going anywhere, well, that's your sign of absorption, right? So there's a lot of different ways you could spot absorption in the market, and a lot of different ways you could use the depth chart, the order book, and then a time and sales as well, or a tape, to get a good view about, a good view of who is in control. Guys, give me 1 second. I'm drinking, I'm on mostly liquids this morning, and I'm drinking Clear Mind Rosemary Mint Sage Green Tea. And I have to hit the head real quick, and I'll be right back. I promise. All right, we're back. Sorry about that. Let me take a look at the chat, see if you guys have any questions, because I've kind of just been going on, just again, off the hip. I got 2 chats actually. Yeah, so a long time ago, I had an issue with Quant Tower. Ross is mentioning it. So I'll give you guys some insight into what happened. And I think that it's fair to share these kind of things, because I think obviously that if you have money on a platform and you're using it, you have a right to know anything that's gone wrong in the past, and maybe possibly avoid that situation. This is a platform I trust, right? This is a platform that, and I'm gonna say that I'm not a technocrat. I'm not some programming savvy person. I just started Python recently. I picked it up again recently, after, taking one of those courses a couple years ago. I'm not the guy to ask when it comes to the technicals about anything when it comes to what takes place under the hood on platforms and software. But I do know that who I do trust, and whose opinion is probably more important than anyone else's, because he's really specific about who he even compliments, is Nomad. So I am Nomad, who is a very well-known OG in this space, market maker, destroyer of markets. And he has always talked about Cryptowatch. And he was actually one of the people that slid into my DMs a while ago. This is going back over a year ago now, telling me, hey, keep an eye out for Cryptowatch. They're going to be introducing ladders, and it's going to blow every other platform out of the water. But I was using Quant Tower. Maybe this was over 2 years ago now, or over a year ago. And it's funny because people ended up sharing the aggr tape of what was taking place, and that was because of me. It looked like someone was buying a lot of Bitcoin. I think the total position was 11 million contracts. So $11 million notional. Might have been that or 8, between 8 and 11. I don't remember why those numbers stick out, but it was over 8 million. And what happened was I know I was not in the wrong at all. I was standing at the edge of my computer. I'd been in and out of my office and the kitchen. I just looked at my screen, and I leaned over, and I was like, yeah, I kind of want to bite here. So I usually just tag on a small starter position for a swing. tag on a small position just so I'm kind of connected to what's going on. If you don't have a position on, you don't have any skin in the game, you'd be surprised. When you have a little bit of skin in the game, you start being a little bit more attentive, and it just kind of dials you in. So that's what I do. I put on a starter, makes me focus a little bit more, and I obviously am interested in it to begin with. So, okay, this price is decent. Let me put on a starter. I lean over, I click. I know what I'm doing. I'm not a moron. I know exactly what I did, okay? And I just enter in a small position, and I think it was 100,000 contracts. And what proceeded to happen was it continued to market buy 100,000 contracts, right? And I'm looking at it happening, and I'm like, okay. I look. Thank God I turned back and looked, and I didn't just immediately turn and go back to the kitchen, because I'm like, what? I'm up to like 900,000 contracts. What's going on? So I cancel it out, and then it continues to send them through, and continues to just rip 100,000 contract buys into the book. And I'm starting to freak out now, because I know that I'm going to buy up my entire risk at some point, and then I'm going to be left with a very small, a very small liquidation level relative to that, and I'm going to get liquidated. So I log into the exchange. It was Bybit at the time, and I go to cancel the order, and I cancel the order. It closes the order out, and then more orders come through from Quant Tower. More orders get sent through. Continues to do this, and it continued to do this until maybe like the fifth time, sixth time. I canceled them all out after I continued to do that. Finally, the order is flattened. And they said that I definitely was hotkeying, and it was my fault, and I pressed it too many times, and I wasn't even hotkeying. I clicked with my mouse once. I'm like, don't talk to me like that. I know what I did. I know what I did. I'm not going to waste your time. If I make mistakes all the time trading. I've cost myself like hundreds of thousands of dollars with dumb mistakes before. I'm not going to make this up for 13 grand. But it ended up being 13 grand in fees. And anyway, so I would avoid that. But the funny thing was, there were a couple people, and one of them was SM17 or FSM7 trades, who were sharing the Agar tape at the same time on Twitter, saying, who is this buyer right now? Because if you looked at it, it looked like there was a TWAP on for 100,000 contracts, just relentlessly buying. Just entire scrolls of Agar, just my orders coming through. So, sorry to say I wasn't actually trying to put on that much size. Why would it matter that the CFTC is calling ETH a commodity? It's a commodity for them for the same reason it's a security for the SEC, so they can be the ones to regulate. We're going to have people regulate the market either way. I think that if you are someone who's holding a lot of ETH, I think that if you are someone who's using ETH, right, a lot of DeFi, you're really hoping that ETH is a commodity and not a security. I think any exchange, I don't think it's debatable at this point. I think it's obviously a commodity. But my point is, if you're a major exchange and suddenly ETH is a security, that's a problem. One other thing I wanted to share. This is one of the great features about Cryptowatch is on their Twitter. And again, I'm going to do the same thing. They share a bunch of templates. So they actually I shared this the other day. I called it my hot pair board. They shared a variation of this. It was for ARB. And I went ahead and I took their template and I changed it up a little bit to my liking. And the reason why I call this the hot pair board, right, call it whatever you want, is there are a lot of times where we go for maybe a month or 2 months at a time, or maybe a couple of weeks at a time sometimes, or even a week now, where the market has an interest in one particular pair, one particular narrative. And if you're a trader, that's where you kind of want to be, right? It might not mean if you're a swing trader, right? But if all the activity is taking place in one area of the market and you're an intraday trader, if you're a lower time frame trader, that's where you want to be. You want to be where that volume is. You want to be where that liquidity is. And obviously that's going to, for the most part, usually be the pair or pairs that the market is currently favoring. It's like the flavor of the month, right? as the cycle progresses, it goes from flavor of the quarter, flavor of the month, flavor of the week, flavor of the last 24 hours. Obviously, as that hot ball of money dries up, or I should say cools down. So this is, I think it's a good view to have, right? You're looking at multiple exchanges. I have the order books on multiple exchanges, the leading exchanges by volume and open interest. And especially if it's something that's relatively new. If you're trading ARB, for example, and you're trading any new pair, right, that doesn't have the most like democratic airdrop or, what's the word I want to use? Not democratic. Let's say it's not the most fair tokenomics, but it's a new release, it's a new chart. I've talked about this many times before. It could sell off 50%. You might have people thinking like, oh, it sold off 50%. Like that means it's up only from here, right? That's a significant correction. But there's still people that have been in the money for months prior that are seed investors that are still up, in that 50% drop, even in a 20% dropping, a candle that's dropping 20% on a 5-minute chart, they could still sell at the bottom of that candle and be up, 100 times, right? So you have price insensitive flows because you have people coming in that now have the ability to sell on a centralized exchange after listing, and they've already bought. They're already in at a price that's like infinitesimally small compared to the listing price. So that sell pressure, as I said, is it's not sensitive. It's not price sensitive. Again, whether I sell, if I'm up 1,000x, whether I sell ARB at, and this is not to use ARB as the example because again it was an airdrop. But if you had a lot of it, it makes sense, right? If you're up $10 million, if you sell at $2 versus you sell at $1.50, not that big of a difference, right? It's kind of like free money to you. So if you're trading a new pair like this, you do want to have an idea of what it looks like overhead, right? Especially, obviously if you're longing. So by having sort of a bird's eye view of all the exchanges and having the books and the tape, you get to see where the activity is coming from, where the sellers are, where the buyers are, and if there's any kind of imbalances, right? So very quickly I could see whether or not there's an imbalance between one exchange or the other, or if just all exchanges are imbalanced, and if we're just, working with a bid-ask ratio that's like 4 bids to 1 ask, or, the size in that case is structured that way, and it looks like there's a lot of demand. I just think that for new pairs, this is the way that you should be looking at the market, right? Or you should have some portion of your screen real estate dedicated to something like this, because you do want to know what's taking place on certain venues, right? If I'm trading something new and it's being listed all across the board on multiple exchanges, and I'm just blindly longing, and I'm longing on Bybit, but I don't know that, someone with massive bags on Binance is sitting above the ask, absorbing all of the flow, then, I'm kind of operating a little bit blind. So again, this is a template that I shared. I think I shared it already in the Discord, but just keep an eye out on the Discord because I'm going to be changing templates up. Like some of these old templates, I used to just dedicate, before I realized that I'd be able to trade on this, I used to just have one screen open and I would be able to look at, for example, okay, is there a spot premium or is there a perp premium right now? Is spot trading at discount or trading at a premium? I had this set up during the USDC FUD, USDC FUD. I was looking at the stablecoin depth for that. So I got a couple things though that maybe aren't, like, I don't really need the tapes board anymore, so I'm going to go ahead and just get rid of that. Tapes ETH. I don't really care for the books. Just showing you, it's just really easy to set yourself up here, and you could duplicate these as well. So if you want to keep one, slightly modify it, change it up to something else, but leave the first one, that is very easy. All right, so any questions, guys? Because I feel like I've just been going on tangents and talking about the platform. I haven't really been focused on the market, honestly. As long as we're below this level, I want to see how this plays out. If we're back above 27.3, 27.350, again, I know it seems kind of ridiculous because we're right there, but I'd much rather wait for that. Then this be the most obvious retest, bearish retest right now. And you still have, we still have the Asian session ahead of us, and it's Monday, first day of the week, markets are open. I wouldn't discount them selling more once they wake up. I believe that you have to go on to the, I think you have to go on to the website for that. I don't want to click this right now because I don't want to dox anything, but I'm pretty sure you have to go onto the website for that. But again, I'm going to be making an entire video dedicated to this because I just wanted to introduce this during the stream. And most of my streams, you know, they are a little bit, like I said, they're not a little bit, they are off the cuff, extemporaneous, not scripted, but my new stream format is Mondays, Wednesdays, Thursdays, or Mondays, Wednesdays, Fridays. We'll see this week. Live trading, narration, take questions. I'm so tired of doing the whole fucking stupid stream of just like doing what every other streamer does is, you know, every other trader even. They come on, they open up TradingView, they have a watch list, they go through all the top pairs, you know, say the same shit, point out the high time frame levels that we're all aware of. Like, you don't gain anything from that. I'd rather honestly just have the ladder open, have this open. If we get trades, we do. You know, I talk less. If we don't get trades, I trade less, talk more, and hopefully make these informative and valuable for you guys. TWAP, how do you notice it? Well, a crappy TWAP you could notice in price action. So a time weighted average price algo buying, you know, in let's say equal $5 5-minute increments, you might see that there's a significant spike in volume and the same amount of BTC bought every 5 minutes. You look at a candlestick chart. A lot of the people that use TWAPs now are using the shitty ones. It's not a uncommon tool. It's not a sophisticated tool anymore. A lot of platforms offer them. You know, In Silico Terminal offers them. You'll see almost everybody offer them. It's good in thick markets when there's enough liquidity for it to eat into. Otherwise, you would want an iceberg. But the most basic TWAP is just X amount of time passes. You know, you're buying Y amount of whatever asset, and that's it. And then until it fills the order, it's just, hey, I'm putting on a TWAP, a 30-minute TWAP for 100 BTC. I'm buying 1 BTC every 30 minutes until that order's filled. And then you might see every 30 minutes on the chart, on BTC's chart, there's a big spike for 100 BTC. You know, a lot of times you could see it in the lower time frame price action. People are using like 5-15-minute interval TWAPs. And it just kind of looks like stair-steppy. It'll just look like price action, honestly, will just be stair-step up. You know, very clean stair-step up. Again, the spikes will come in at the same interval of time. It's easier to see in hindsight, right? If you're looking at a tape, a little bit different, right? You might see consistently the same amount of size come through, but, you know, there's a lot of times where that'll happen anyway, and you're just going to think you're seeing a TWAP, but it's just randomness. You could look at the open interest. So if someone's using a TWAP and it's a just consistent TWAP, nothing fancy, not like changing based on liquidity, changing based on size, which like better TWAP should vary. They should be a little bit more dynamic because you don't want to just continue buying if things change, right? If spreads widen, you don't want to buy as much because then you're gonna have more impact. If you are TWAPing, for example, let's say you're using a TWAP and you're buying a lot of Bitcoin and you're doing it fast, you know, market makers are going to pick up on that pretty quickly, and that flow is toxic, right? So it's your taker flow. So if you're a market maker and you're sitting on the offer, well, let me just get out of the way, or let me widen spreads, let me back up. And then if you're using that TWAP, then you are, you know, slipping more and you're incurring, you know, greater transaction costs as a result of that. So a smarter TWAP might take into consideration, you know, certain changes in that, in those conditions, like the spread, for example, like overall levels of liquidity, so that, you know, you're not ultimately maybe buying into your own, an empty book that you're creating, right? You know, creating momentum and creating you know, slippery conditions to buy into. But if you're looking at open interest and the TWAP and a TWAP is taking place, a lot of times you'll see also the open interest will just have this kind of 45-degree handicap ramp up ascent. A very even ascent. No major changes in open interest that come along with someone kind of aping in and aping out. There's a lot of times where if you look at open interest and it changes based on a certain amount in a certain period of time, let's say it goes up 5,000 BTC, or open interest jumps 10%, price only moved 2. Open interest jumps, 5 times as much as it normally would in X amount of time. There's a lot of different norms that you might establish to determine what behavior is normal and what stands out. A change in open interest that's really gradual over time is usually what you're going to see when you see a TWAP being put on, because it's accretive, it's slowly building up that positioning, versus, spike up in open interest, wipe in open interest, gradual portion, plateau, spike. It'll look a little bit more gradual. And again, the best way to describe it is like 45-degree angle, or just like a handicap ramp up, right? Slowly building a position over time. Yeah. What else? Like Sailor, for example, I'm pretty sure all his flow gets sourced through Coinbase. So there's a desk that obviously builds his position, and I think that they TWAP through Coinbase. And I would hope that they would be smart about their transaction, or mindful of conditions, because otherwise, again, if you're just using a basic TWAP and you're building a massive position, if you have certain algorithms that can pick up on that, right? And they say, okay, X amount of Bitcoin was bought in such amount of time. It's kind of stands out as not normal. It's not the normal randomness that we see. There's some kind of cadence and some kind of pattern that is taking place in the flow. Okay, well, I'm not going to provide as much liquidity because it's toxic flow. I don't know if I'd be able to buy it back after offering it. So rather than doing that, hedging that out, just step out of the way and get out of the way of that toxic flow. And then you have, the market is beginning to get away from that point, and then you're buying at higher prices. And but what I said this morning was Sailor, it looked like one of the better buys that he's put in recently. Bought through a key level, created momentum ignition, where someone, pushes the market to try to get it to move further by maybe blowing out stops or creating momentum. So yeah, as long as we're below this, let's look at the daily right now. I mean, weekly doesn't look good, right? I don't know what kind of candle that is. I'm not a TA dude. A doge or something like that. We haven't had a major move outside of this range, but again, I still think trading back above that Binance level, I'd be a lot more confident. If we were able to do that, though, look at all the activity put in at this low. Again, like I said earlier, I would just start looking higher again. Just to be mindful of something, a lot of people are looking at this, and myself included, and yeah, it's a very bullish move. We broke outside of a 9-month range. Not something that you want to step in front of, right? After a range like this is broken, there's a good case to be made for the S&P being bottomed, right? Or having bottomed already. The QQQ over the 30-week moving average, over the 200-day moving average. Again, that market also taking a ton on the chin and still trading above 4,000, talking about the S&P. So both markets taking a lot on the chin, right? A lot of things that you would expect in a bear market, and now trading higher. A break outside of a 9-month range like this is usually something that results in quite a significant follow through. So you're looking at this, and a lot of times people are using something like this as a proxy, hovering under higher time frame market structure that should arguably act as resistance. Going back here, this level that we're sort of stuck between, rocking a hard place between, this ultimately the range where the all-time high was put in, the lows of that structure, which held for, going back to January 2021, right, up until May 2022. So we're tapping on that right now. yeah, it's high time frame resistance until it isn't. But the same thing, what took place back here wasn't the case that, and this is a 3-day chart, it wasn't the case that we just blasted right through that, right? We spent quite some time down here and put in, I think this was like a month-long range, right? So from the initial move up, beginning of April, until we finally started really squeezing through May, excuse me. I thought I was going to burp. And then going back here, I mean, if this is a similar move through the most important contextual level off of the low, a lot of things lining up from a narrative standpoint as well. Like this is Bitcoin's time to shine. We are, possibly due for a couple more weeks of this, right? The longer this spends up here, honestly, the more bullish I would get. It's just the market was knocked off its rocker multiple times from here, right? Not accepted once, except for briefly. And now if we're going to be spending time up here in an area that, if you're looking at some kind of profile, volume profile, this was a low volume node. We're just filling that out. It's the first time in a long time the market has been accepted there, when previously, this is the only time we traded through there since all-time high. And this is just a gap down. So we're filling that out. We're accepting within there rather than ultimately being rejected right away. The longer we move sideways, I think that it just becomes more bullish on us, honestly. I gave my plan on Twitter. I've been trading this intraday. As long as we're holding 25, I think that it's even probably lower than that. As long as we're above 24, right? We're not putting in constructive price action inside of this range and we're holding the top of this. I think you just got to give this time. I think you could take plenty of trades both ways, right? But big picture, if you are, you've just built a big spot position and you have a pretty good cost basis, I don't know. I wouldn't try to get too fancy with it. As I said many times before, big ships turn slowly. So a lot of people, they see a big move happen. It's very big, right? Because something big took place. Not to be too redundant. Big move, right? Got everyone's attention. And then everyone's waiting for the next one to happen. And you forget that markets actually range like 80% of the time. Or 70% of the time they consolidate. So consolidation would be bullish. The best kind of consolidation would be, for example, if we just use something here, the best kind of consolidation would be to see that spot prices have been holding above perp prices the entire time. So for example, Bybit perp 100, Coinbase 118, Binance 93, Binance futures 75. So there is like a $15 to $20 premium from the spot market to the futures market. So it's a good sign. So futures trading in backwardation, spot trading at a premium. The best case scenario would be for this to happen. Obviously, funding is going to be negative while this is happening because it's just a derivative of those two. And open interest to increase, right? You want shorts to build up. You want people to really doubt this and start aggressively shorting it. And that's the only reason why I was thinking, all right, maybe moving lower briefly would be bullish, right? Move a little bit lower, break down to, let's say, for example's sake, let's say we were to break to 20. Kind of hit 26.5 right on the nose. But again, this is not without merit. Like there's something that's yet to be resolved that could possibly send us lower. But if we were to break down to 26 and you see funding, right, still being relatively neutral to negative would be best case, and open interest is increasing, you see a bunch of shorts coming in, and you have people betting against a trend and then saying things like, oh, this was a deviation, and bear market's still intact, and more capo on the timeline, that's just fuel to send us higher. The saying is that sometimes the market has to sell off to move higher. You have to have people betting against a trend. Otherwise, like for example, I mentioned the other day, if this is not a derivative-led market, you're not going to get a blow-off top, right? So this move was spot-led. If it's a derivative-led market, you'll have some kind of blow-off top. Big build-up and positioning, thousands of BTC built up in a tight area, forcing someone off sides, getting one side to really capitulate, having that sort of exhaustive blow off. That's something that is, it's a characteristic, or it's a result of overheating in perps, for example. So when I say derivative, I'm usually just talking about perps, not talking about options. So that's usually something that you would expect to happen. If it's a spot-led move, you're going to get to the point where buyers lose interest, and buyers buyers are running out of money, right? You're not finding any buyers anymore. You have to come lower to find buyers again. You have to create sellers. You have to have people betting against a trend. And in a spot-led move, I think that you're more likely to roll over than to have an exhaustive spike up. So I was mentioning this around this time because we weren't going to get what was like the, prototypical swing failure, spike above the high, major rejection. Instead, we just kind of rolled over because buyers are just nowhere to be found. So. No, so it's a great point. So Brandon, I do think that 4-year cycles I think they're going to be, history doesn't repeat, but it does rhyme. I think the same people being in the market over and over again, I think there's something to be said for symmetry in markets. Brent Donnelly talks about this. I think the halving will have an effect. I don't think it'll be as crazy as it was in previous cycles. I think it's just going to be diminished returns moving forward. But what is a pattern on a chart? It is the representation of human behavior. So specific price action, do you want to look at it, and lean on it too heavily? I don't think so, because again, all that took place within completely different context. Markets up only, equity market in over a decade-long bull market. QE was there. So yeah, this is not an accommodative environment whatsoever. But I think that this conversation that conversation is losing strength now. So if you showed me a pattern that looked like it was repeating over time, and this was months ago, in the thick of, QT and hikes, and we weren't having this contagion and banks blowing up, and now it looks like used car market's starting to roll over, and there's some signs of, maybe that recession that was only a possibility is now much stronger. If you ask me that, you think this pattern that we saw is going to hold up? Then I'd say no. The further out we get, we're getting really close to just kind of, we're actually, oddly in line with the 4-year cycle still. And I don't think that you're going to see, all right, so just my opinion, and it doesn't mean anything, because I'm someone who just reacts anyway. We all say something, right? We're all like, hey, I think this is what's going to happen. The difference between someone who's good and someone who isn't is someone who still kind of hangs on that opinion as the market is saying otherwise. If I have an opinion on something, I think Bitcoin's going to do this, and it does the opposite, I just take the opposite position. I have no qualms or I have no hesitation in trading against my thoughts that I had yesterday, 5 minutes ago, a week before. I changed my mind very quickly. I don't think the Fed is going to cut in the near future, but I think we're probably done with hikes. I think that maybe we have one more hike and then that's it. And then, I just think I think it's more than likely we're going to repeat loosely what has happened the last few cycles. I can't see the equity market going through a very long period of down only. It's just different types of buyers in that market. Different types of buyers, less price sensitivity. That works in both directions, but I just don't see that happening. The thing is now, if you have to think about the equity market, which BTC is very correlated to, right? I've said this for years now. I was probably one of the first people to say this, by the way. I was saying this years ago that Bitcoin traded like tech. I used to call it a tech stock. And oh man, people were just, dude's LARPing. He doesn't know what he's talking about. People get really defensive in crypto. People that have just started trading crypto, very defensive of it, obviously because it's their ticket to wealth. That's the way they're thinking of it. I just call a spade a spade. It looks like it trades like a tech stock. It trades like a high beta tech stock. A multiple of Apple, of Amazon, right? Or NVIDIA at the time. If the S&P is holding the 200, I've said this many times before, holding the 200 and then above 42. If we're above 42, that's a 9-month long range breakout. We're above the 200 period moving average on the daily, 30-week moving average. These are really important trend following tools for people that swing size much larger than anyone we know. And I think the longer that we hold those levels with stocks, the more people that are on the sidelines start to get worried. If you're an asset manager, sorry, I'm at that stage where I got to cut my beard because the hairs are growing into my nose. That stage or that age, I don't know. Stage in the beard, age in life. If you're an asset manager and you've been flat because of XYZ reason, and it's the end of the first quarter, and the S&P is up, I don't know, what's it up? 6%, 7%? Let's see. There we go. Let's see. Where's the S&P? Let's blow this one up. And then year to date. It's come off quite a bit. So the S&P is up 3% year to date. Let's see, the NASDAQ. I took the NASDAQ off this. 3%, whatever, 3%. Okay, it was 7% the last time I was thinking of this. Still holding the 200 though. All right, so if I open this up and we look at the 200 daily, right? Still holding the 200. So after everything, still holding the 200. Okay. If I'm an asset manager and I'm flat, I'm really worried right now because I'm not going to have a job next year. If this ends up breaking out and, starts trading back above this high and that was it, you're probably not going to have a job. You're going to have to play catch up, and it's much easier to trade and to operate and to feel comfortable when you're zero bound, when your performance for the year is, you're playing with house money already, right? When you're already up. Otherwise, you got to take some risks towards the end of the year that no one wants to take, or that you can only afford to take, realistically, when you're up. So anyone who's on the sidelines right now is kind of biting their fingernails because if the market continues to move up, they're going to be forced into the market. It's the best way to put it. What did I study in university? I studied finance and economics. There was a year where I switched to biochemistry. Huge science nerd, always been a huge science nerd. Was like the kind of kid to read bio textbooks, was big into astrophysics for a while. All this stuff it's just a sign of what happens as you get older, by the way. When I was in my 20s, I was like a walking encyclopedia. That was the joke. I could tell you everything about astrophysics, string theory, biology, finance. And then as you just become one thing, all that other stuff, if you don't use it, you lose it. So I'm actually just starting to pick up more Brian Greene literature. There's a guy, I used to read a ton of Brian Greene, whatever he put out. I think he wrote The Fabric of the Cosmos. But I was a huge science nerd. And then it turned out I wasn't into lab. Like I didn't care too much for lab. I just cared to know how the human body worked and to know. And I was more interested in biochemistry from a hobbyist standpoint, as dumb as that sounds. Then when it came time to switching my major and actually doing the lab, I wasn't as interested. I don't know why. That's really weird, right? Because if you were interested in astrophysics, if you were interested in astronomy, and then you went to the, if you went to, well, let's say, what telescope do we want to think of? What's the biggest telescope? Shit. Either way, if you had the opportunity to sit at that all day and look at it, you'd probably be, over the moon. Interesting analogy to use or metaphor to use. But the point is, I was finance and econ, switched to biochem, switched back to finance and econ. Hubble, thank you. See? Memory's going. Any questions, guys? We're like an hour and a half into this. I just wanted to introduce this platform. Like I said, I'm going to make a dedicated video to it. It'll be pre-recorded on my YouTube channel. The links are below, so make sure to check them out. Cryptowatch and Kraken have always been held like to the highest standard in this market. I always wanted to trade on Kraken, and I never could because unfortunately, I am a victim to the bit license, and that means that you can only trade on your spot on Coinbase or Gemini. But I always wanted to trade on Kraken. I've always been a huge fan of Jesse. He's just badass. He's obviously not CEO anymore, but I'm pretty sure he probably sits on the board still. But everyone that I've ever held in high esteem in this market has always raved about Jesse, Kraken, and Cryptowatch. And when Cryptowatch came out, again, it was when the desktop platform came out, I was blown away. I remember the first person I shared with was a computer nerd, not to insult anyone, but was telling me about how this thing, barely used XYZ, whether it was CPU, I don't know. And I was very impressed, but again, the issue was you couldn't trade on it. So now that you could trade on this, I think that you're really just you're kind of handicapped if you're using a website on the exchange to trade, to be honest. You are. I mean, a lot of the times the exchanges will, like, for example, if an order can't be submitted on an exchange due to volatility, now the level's actually working. You'll see that if you're using a third-party application like this, that it'll still go through, and you won't have the same issues. And this platform is secure as well. So the fact that you could do all this now, that you could chart, that you have these order flow tools, you have I haven't even gotten into anything. You have all the alerts that you can use, trading off of the chart. I think they are set to take the #1 spot in terms of trading software in this market. And for the longest time, that was like up for grabs. Like I had always talked about it, always up for grabs. I can't believe no one is making like a one-stop shop for, they see what this market is. They see that everyone's using all these different platforms. Your screen real estate is 7 different website destinations. I'm looking at order books on Okatoki, and then I'm looking at Coinalyze for this one indicator that's not on TradingView, but then I have TradingView open, and then I'm on the exchange, and then I don't want the exchange to take up my real estate because it's got a chart that I don't need that's redundant. I'm just going to make that window really tiny, all right, so that I can only see the order template on the exchange and cut that and then put that next to another window, and it's not good. So yeah. And I know that they're going to be releasing a lot of other things that I can't get into right now. So as they come out, I will definitely be demoing them and displaying them for you guys. But be sure to check out the links below. Shout out to them for sponsoring the stream. They are sponsoring the stream. We are partners. That's what it means when I say powered by. I just think it comes off the tongue better. But yeah, so this is a professional relationship we have. I think that's really important too. So I have a professional relationship with them. I have a professional relationship with Bybit. There is no mystery as to what that entails. I've always been someone who has wanted to reserve that opportunity or that possibility for people or exchanges or products that I really trust, because I think there's nothing like people will bash other people for sharing products and shilling, but then they will go and trust their money on that platform. And they find it weird that someone might want to actually work with that platform. Very weird. If I like something, I want to give it as much exposure as possible. I want other people to be able to benefit from it. If I don't like it, I will say that I don't like it. I will tell other people that share it that it's garbage. I've always been outspoken like that. Yeah, I think that by me partnering with them, and again, Nomad is way more important than I am in that regard. It should tell you about the quality of the product and the people behind it. So I think I'm going to wrap it up though. I know the stream is probably a little bit all over the place. I will, like I said, make a separate video for the platform. And then as soon as they are connected to Bybit, the problem with Bybit is the unified trading margin. So I know that that's a problem with every other software connection right now. We'll be trading on this live during the New York Open 3 days a week. So I will just be using this platform. You will learn every little detail about this platform that makes it superior to other platforms. Hopefully, the one thing that you want to learn when you're using anything is the sort of shortcuts, right? Little nuances, tips and tricks. So I got a bunch of those for you that can be really helpful, make it a lot smoother. Not the actual smoothness of the platform, but things that maybe you could get rid of, eliminate, or modify, and that might be helpful for you. That's it, though, guys. Shout out to Cryptowatch. Check them out. The links are below. The mobile link, the desktop link, that is below. And yeah, shout out to Bybit as well. Take a look at the description. There's more than a few things down there for you guys to take advantage of. And until Wednesday, I hope you guys